All right, ladies and gentlemen, we're back with our end of day PulseWave report with yours truly, the Algo Capitalist, aka the Vulcan, coming to you live from PulseWaveTrading.com, home of the world famous PulseWave price trigger reports. All right, so Bitcoin futures here continues to move sideways and hitting new 52-week highs on a spike today after having a crash alert coming into today, and also gave you a little bit of downside production. I think there's a lot more downside production to come, however, because of the bearish trend momentum reading. And it's funny that the market did it while hitting a new 52-week high. So fresh 52-week highs on the back of a crash alert with downward sloping momentum. Very interesting, to say the least. So where might the market find support? Top of the Kumo cloud here is where we'll probably find some support around the 28,000 level. Next support is not until 25,000. And after that, it's a long way down. All right. So it has a far way to fall. And that's one of the dangers. The longer these markets consolidate like this, the bigger the move once the market breaks out of the primary trading range. And that's what you see happening here for the most part in the Bitcoin futures. So to reiterate, in last night's video, I gave you multiple crash warnings. And I said, we had crash alerts across the board coming into today, and the market did not disappoint. The crash alerts played out perfectly. So now the question is, will this continue, and how deep will the corrective move go? And that's really the million-dollar question. Next up, we have silver futures. Silver futures are still stronger than gold, So the market decided to pull back a little bit along with gold. So this was more so a sympathy move to mimic gold, because right now gold is a lot weaker than silver. And silver still has the bullish trend momentum reading. So all pullbacks are going to be bought here in silver, because it's in the sell the pullback, sell the dip mode. I'm sorry, buy the pullback, buy the dip mode. Back here was sell the rally mode, but now we flip to buy the dip. So I think the market will still remain supported above the $22 handle. If it drops below $22, then that's it. It's going to give you a bearish trend momentum reading and start tracking lower with gold. But for right now, silver still in the buy zone. I know, hard to believe, but it technically is still in the buy zone. Next up is nat gas, which is still in a locked-in bear market. Nothing else to talk about on that one. The Dow. All right, let's take a look at this Dow. So last night in the chart segment on the Dow, I raised the alarm. I said, whoa, not only do we have a crash alert for tomorrow's trading, but we have a negative bot check. And what did we get? A big down move. Way to go, PulseWaves. PulseWave price trigger reports saves the day. We were warned that this was going to happen, and it happened immediately. And the market stopped short of breaking 34,000. So that 34,000 support, the market stopped short right there. Doesn't mean that it held. It just means that it stopped short there. You still got tonight and Friday to deal with. It could still break it. If it does, the next target is between 33,000 and 33,500. All right, and you got this bearish trend momentum reading, so you're in the sell the rally mode regardless. But that's where we're headed. That's where the major support is right now. So the negative bot check crash alert played out beautifully. We got immediate response, and now I think the market may be seeking for some kind of follow through. So we will see what happens. Tomorrow should be a big day. We'll see how the market closes. The NASDAQ 100, same thing. We had a crash alert coming into today. Now, the NASDAQ 100 futures is giving us a negative bot check on today's price action. So now that means that we just got an alert that a big down move is going to follow this negative bot check. So we had a crash alert coming into today. We got the downside production. Now we got a negative bot check. So the next move to the downside could be quite substantial for the NASDAQ 100, ladies and gentlemen. And we do have a bearish trend momentum reading. So support for the move is not down until the top of the Kumo cloud at 14,000. So this could be a really big move. We're looking at the possibility of a 1,200 point drop coming potentially in the NASDAQ 100 on the back of this negative bot check. So definitely word of caution there. Next up is gold. Now, gold had the negative bot check coming into today. And yes, the market did give you some downward production. I don't think it's done yet. 1900 is being tested right now. If the 1900 doesn't hold, then that's it. That's a wrap. It's curtains for gold. We're looking at a several hundred dollar drop coming in gold. I know it's hard to believe, but that's what the algos are showing. And we got the bearish trend momentum reading on the back of this. So yeah, I think the down move cometh for gold. Looking at the S&P 500, we had the crash alert coming into today. We talked about it in last night's video. And the market has support between, I want to say 40.50 and 41.50. So you got 100 point, cushion here, air pocket of support, which corresponds to the top and the bottom of the Kumo cloud respectively. We got the initial downside production today. We got the bearish trend momentum reading also. So I think once the market breaks 4,400, I think that'll be the intraday price inflection point where we'll see the acceleration to the downside coming in the S&P on the back of hitting a new 52-week high. Next up is crude oil. Crude oil is still in limbo, still neutralized. Nothing to see here. The market isn't giving up nothing. This market is crazy. This chart pattern is absolutely insane. The price action is going absolutely nowhere. You've gone nowhere since May the 5th of this year. You haven't gone anywhere since May 5th. Price action is still where it is, still where it was in May. So this morning is very abnormal. I don't think I've ever seen price action like this. Consistently below the Kumo cloud and just stubborn. Can't rally and can't fall. Unbelievable. So we'll wait for this to come off neutralized to see what we're going to get. Next up is the Russell. The Russell's been the weakest of the stock indices, as we well know. And we had a crash alert coming into today. We got massive downside production and another crash alert for tonight into tomorrow's trading for Take Back Friday. Support is right here between 1750 and 1800. All right. So that's where we're going right now. The first stop is 1773. So 1773-ish, 1800-ish is the initial downside target on this move. All right. So we got a bearish trend momentum reading also. It is what it is. Next up, we got the US dollar index. All right. So the US dollar index still bullish trend momentum reading, which means the market's in the buy the dip, buy the pullback mode, and has been that way for a long time. Nothing has changed at all. All right. Going all the way back to April. And the market's been respecting the trading range, 101 support, 103 resistance. It extended it out here to, let's just say, 105. All right. So 105-ish is now the true resistance mark. So now we're 105 to 101, which is quite the expansion. So you got a rather wide trading arc here in a range that the market is just not violating. It's not dropping below 101, not going above 105, and it's just hanging out. All right. Just totally weird. These markets, the price action that we've seen in these markets over the last couple of months has been the most bizarre I think I've ever seen. And I think that's very telling. I think it's a warning, letting you know that something drastic and maybe even catastrophic is on the horizon. Looking at Ethereum futures, we have the bearish trend momentum reading. We had a crash alert coming into today. Got a little bit of downside production. Where is this initial move? Well, we're in a thin Kumo cloud, so you're already right there. But if the bottom of the Kumo cloud 1850 doesn't hold, if 1850 doesn't hold, then on the break, the market's going back down to 1600. That's where the support is. And that's the initial downside target. So that's quite a ways down, folks. I know, hard to hear because you got a long-term trend is bullish. The intermediate term trend is bullish, but the trend momentum reading is no longer bullish. It has come off. In order for this market to head higher, it would need to relock in with the bullish trend momentum reading. And the bearish one will have to fall off, and it has not fallen off. It has not happened yet. So this is what it is, folks. We trade what the market shows us, not what we think or hope or expect, what we think the market should be doing. And that's part, that's part of trading. You have to be patient. You get in the market and you let the market tell you when to get in, you let the market tell you when to get out. And you ride the trends for as long as the trends last. All right. For some people, it can be hard to do. One of the pros and cons, or when you look at the pros and cons of trading, period, you got your intraday day trading, then you got your swing trade, position trading. When you're doing swing trading, position trading, what happens is you hold your positions as long as the market is moving or trending in that direction. Now, in times like we've seen with the US dollar index chart or the crude oil chart, there are times when you're filled and you're in the market and you're riding a particular trend and you're in it for a while. And while you're in it, the market's swinging up and down, it's like riding the bucking bronco. And some people can get afraid when that happens because, like, oh my goodness, I've been in this trade for a month and a half, and right now I'm down on the position, and you're experiencing a drawdown. That's because as the markets ebb and flow, and the support and resist, and the market price action flirts with the support and resistance zones, what happens is it's designed to shake out weak hands, weak longs, weak shorts. But if you hold fast, if the system's still long and telling you to stay long, you stay in the position until it's time to get out. And when the trend changes or shifts, the market will definitely get you out and stop you out of the position with your profit. That's how you do it. Some people can't take the drawdowns. I know it's annoying sometimes because you're holding a position and, the Dow may move against you 3,000 points and you're still in your position and you have not been stopped out, and you won't get stopped out unless the trend changes. And normally it doesn't. It just ebbs and flows, and then it breaks out and continues trending again in your direction. And then you cash out, take your profit. But that's trading. Okay. When you're, swing trading, position trading, you're in it for the long haul as long as the trend lasts. Sometimes a trend may only last 3 days. Sometimes it can last 3 months. Sometimes it can last years. And you're okay with it. You take profit along the way when you can. But for the most part, it's a patient game. And that's what we're seeing right now. The Fed has been trying to keep the stock market elevated as long as possible, because then that helps them to spin the narrative that the economy is okay, it's in recovery, they got interest rates under control, nothing to see here. All right. And as long as they can do that and convince enough people that it's all good, and they can point you to the stock market, people will feel good about it. But let that stock market give way, and then it's a lot harder to keep that narrative of recovery going. You know what I mean? So I say all that to say, trust the process, trust the system. It will get you in and get you out. You don't have to second guess. Just get in there and ride it and let the market do what it does. One other note too. Now, the POP method is the method that we designed to help you on when to make decisions if you should cut a trade or take profit or not or whatever. And it's a good methodology. It's great actually. But I took it to another level. When you're swing trading, position trading, it's better to use the recommended stops on the report as the market moves. That will keep you and give you the ability to stay in the trades longer, a lot longer, and ride out entire trends. So if the Dow is going to run from 30,000 to 300,000 with ups and downs along the way, the system's giving you the opportunity to capture every penny of that move. But you got to trust the process, trust the system. The system works if you work the system. And the way you do it is by using the recommended stops on the report. So I want to encourage you in that, because I think that as the economy gets weaker and weaker, the market's going to start giving way and getting weaker and weaker too. And a lot of you under the sound of my voice are going to have the opportunity to become rich. And the only way to do it, though, is with patience. So you have to work the system, because the system works if you work the system. All right. So I just want to encourage you this evening. Hopefully everyone had a great day. I know it's a weird week because the 4th of July fell on a Tuesday and tomorrow's Friday already. So Take Back Friday's in full effect. Not sure how that, how things are going to move, but we'll be ready. We'll be right here watching it and preparing and ready to move and strike when the market is ready for us to strike. All right. So that being said, remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back, and smash that like button. I'm out. Peace.